If you're anything like me, I'm always up for a challenge. This video, we're gonna be looking at the 30-day money challenge to get smarter and be more successful with your money. Now, we're gonna kick this off on July 1st. That way we have a full 30 days to break this down. Now, everybody wants to get better with money, whether it means earning more, spending less, finding a side hustle, generational wealth, sending your kids to school. There is a lot of really processes and thought behind getting better with your money. Even if it is just baby steps, guys, even if it is just little by little, you can do it yourself. So let's break this down for the next 30 days on exactly what we're gonna be looking at. That way you can get ready for the challenge. Day number one, identifying your money goals and your values. This is really the first step to managing your money. When you put a why behind what you're doing, when it comes to goals, when it comes to values, you really see the logic and the reason and the resources and the drive. It really builds the intensity to get better with money. It can change your entire life, which is the reason why I started this YouTube channel, is being able to affect people and affect the life that they lead when it comes to finance, when it comes to investing, creating generational wealth, and just plain getting out of debt, guys. It is one of the absolute toughest things to do as Americans nowadays. Now, number two, find an accountability buddy. Now, this is going out to Josh. He knows he is my accountability buddy, has been for a lot of different projects and things that we've done. Your financial goals don't mean much if you don't stick to them at all. Share them with a friend or family member who is going to hold you accountable. Now, personally for me, this is a huge resource, because if you have someone who is holding you accountable that you're checking in on a daily basis, whether it's exercise, whether it's career development, regardless of what it is, guys, it is super important to have someone in your life who is going to be that support aspect when it comes to finance. Not only just finance though, everything in your life. Day number three, open a high yield savings account. Right down there is the link below to M1 Finance. Open a high yield savings account, guys. They have a savings account that is paying 5%. That is right, guys, a 5% return on a savings account, liquid, which is absolutely huge. One of the biggest savings and things that I do is automating the savings. So if you have money going in every month automatically, you don't even miss it, you don't even see it. That way you have your emergency fund, you have a retirement fund, you have a savings account to build that up. Now, number four, start saving for a short-term goal. This can be something very short-term. You're looking at a vacation, you're looking at weddings, there's something that you want to do. Start small, get in the habit of saving on a regular basis, which again is one of the biggest things, guys. Once you start the habits, once you start the behaviors, once they're in place, even if you automate them, makes it incredibly easy to go through. Now, day five, figure out how long it'll take you to get out of debt. This is really the first step towards debt elimination. Debt elimination is freedom, guys. I cannot, again, stress it enough. When you don't have debt, guess what? You have a lot of money to invest. You have a lot of money to do things in your life that you want to, short of just giving it over to financial institutions, banks, people who are borrowing you money. You are literally throwing money away. Be realistic with it, guys. How are you going to break it down? How are you going to repay the debt? Number one, not going to reacquire the debt. That is probably one of the biggest things that I see, is we have people that will consolidate all of their debt. 2 years later, they're doing the exact same with debt consolidation. The cycle has to stop of spending before you can actually get that built. Day six, start building the emergency fund. This goes hand in hand with that savings account, guys. This is the point where we want to save that $1,000. If you've ever watched Dave Ramsey, the emergency fund, saving the first $1,000 is the biggest thing that will help you cover unexpected expenses, car repairs, medical bills, without having to rely on credit cards or borrowing money. You'll get to the point eventually where you have 3 to 6 months, but right now it is to start building on day six. Day seven, calculate your credit utilization. This is huge, guys. You have to get familiar with your credit score. Credit score is the driving factor when it comes to the rates that you are going to get for any money that you borrow in the future. If you're looking at cars, if you're looking at boats, if you're looking at a home, your credit score will determine how much you're going to pay for these items. When you pay more for the items, it is less than you have. You have to determine and know exactly where your credit score is, where your credit ratios are, and where your utilization, this is 30% of your score, guys. It is huge. Day eight, audit your subscriptions. This is something that really drives me crazy. As a financial counselor, guys, auditing your subscriptions, on average, they say it is just north of $200 a month that people are paying for subscriptions without even knowing it, which again, to me, is just absolutely crazy that people are looking, that are subscribing for things, never canceling it, never turning it off, and never using it. Day number 9, automating your savings, automatic contributions. I again cannot say this enough, guys. Even if it's 25 bucks, putting away the money on a regular basis every time you get paid, out of sight, out of mind, it is really the biggest thing. Day 10, evaluate your car insurance. This again is a huge one. I went from actually USAA, we moved over to AAA, saved us about $800 a year moving to AAA in the state of Michigan, which of course $800 is a pretty substantial amount when you look at that over a 12-month period. In addition, it was the exact identical coverage that I had before. Moving to another car insurance company, they'll usually go ahead and help you with it. Day number 11, this is checking our credit score, guys. You want to know exactly where you are. The higher the score, the better interest rate you're going to get, the more likely you're going to qualify for new credit cards, auto loans, mortgages, everything that requires a credit score. Now, there are a ton of places that can check your score for nothing with no cost. You want to make sure, again, that you're checking your score and monitoring it just in case anything does come out of the ordinary. Now, day number 12, making the most of your subscriptions. If you're paying for Prime, you get more perks than you're actually using. You have to take a minute, look at all the benefits that you get. I know me personally, we have Verizon. Verizon offers free Disney Plus. We also do get Hulu. We also do get ESPN. So a lot of those subscriptions we were paying for before. With the plan that we have with Verizon, they are giving those for free. And a lot of cell phone providers as well as credit card companies have a lot of benefits that you can get. Day number 13, funding your HSA, your health savings account. If you're eligible for an HSA account, guys, it is literally free money you're leaving on the table, similar to what we see when you start investing with a 401k and you get a match. The HSA is a tax contribution vehicle that you need to use. Health expenses are coming, maybe not today, maybe not tomorrow, but overall you are going to see them. Sign up for a personal finance newsletter or subscribe to a YouTube channel that offers financial education, which is mine, guys. Go ahead and subscribe. One of the easiest, cheapest ways, guys, financial newsletters or videos are free. It is absolutely free to get all the information. If you're not getting the financial education you want, if you're not getting the information, honestly, take accountability. It's probably your own fault. If you're not looking for credible sources, if you're not relying on whatever is coming up on TikTok, or regardless of where you get it, you have the ability at your fingertips with the internet to find anything you need about any topic that you really do need in the world, guys. You can find it. Now, day number 15, starting investing. There's no time like the present, guys. Now, one of the big things that I learned very early in my career is inflation will always be there for all of time. You're trying to hedge your bet against inflation by investing in the market, by investing in employee-sponsored 401ks, IRAs, things of that nature. You are just trying to get ahead of the inflation curve. If you start, when you look at putting $200 a month, could be more than $1 million plus in 45 years with a very conservative return, which is the reason why putting money in now will benefit future you. And trust me, the future you will completely thank you. Day number 16, update your income with your credit card company. This is one of the big things, guys, when we talk about the credit utilization. If you have a much higher income than when you got your card, chances are you could go and increase the limit on there, which again kind of changes the capacity, which can be huge when it comes to improving your credit score. Now, that doesn't mean that we run out and we buy more stuff because now we have a higher limit. It means that you're more responsible for the debt. With your increase in income, in turn, that can raise your credit score. Now, day number 17 is reverse budgeting. This is kind of interesting. Start by putting 20% of your income towards your financial goal, such as paying down debt, saving for retirement. Now cover all of your fixed expenses. So instead of doing the 50-30-20 rule, we're actually doing the 20-30-50 rule. So it is a reverse budget. Me personally, if you check out my videos, guys, I do zero-based budgeting, which means that every single dollar I have every single month has a purpose and has a fundamental place that I'm putting it to. If it means a month that I have a little bit more because of YouTube, things of that nature on the side hustle, I put more into investment accounts, I put more into retirement accounts, put more towards the college funds for my kids. That is the way I do my budgeting. Day number 18, put your tax refund to good use. This is a way to really jumpstart any financial goals. If you're looking to go on vacation, if you're looking to get something new, you can really take a big step towards your financial planning, your financial goal, build the emergency fund, saving towards retirement, putting more money. The tax refund is not a time to just kind of catch up, to try to attempt to catch up on some of the bills that you've accumulated throughout the year. It is just a time that you need to sit down and really what is going to be the best use and what is going to give you the most value out of that. Now, day number 19, we take a step towards eliminating your debt. If you're struggling to pay off credit card debt, you may be able to get rid of it faster with consolidation loans, personal loans, and a lot of times, guys, those are at a much lower rate, which of course, with the improving, you know exactly where your credit score is. Also, another option is a balance transfer. If you're moving from something that has, let's say, a 20, 25, 30% rate, moving it over for the next 12 months for a 0% rate, if you can really focus and pay that down with a minimal balance transfer fee, chances are you can save a considerable amount of money by moving that card over. Now, day number 20, reevaluate your prescriptions. You may be overpaying for prescriptions. This is one of the most competitive places that we see, guys. GoodRx, ScriptSave, WellRx, there are an incredible amount of highly competitive companies where you can find, if you're taking regular prescriptions on a regular basis, you can find them much cheaper. Day 21, diversify your income stream. Now this again is a huge game changer, guys. It's never been easier to boost your income through part-time work, side gigs, side hustles, really drawing on the skills that you already have, just like financial education, paying as much as $50 to $100 an hour to earn passive income. You can even do dividend stock investing. There's a lot of different things that we've talked about on this channel to go ahead and diversify your income. In addition, guys, if your primary source of income, let's say, with the market, with inflation, with everything that is going on in the world, if you are laid off, if you lose a job, if anything happens downsizing, you have a second stream of income. Might not be fully supplementing what you are making at your primary income, but you do have a way to supplement your income with the dividend stream. Now, day 22, tackle a financial task that you've been avoiding. This is a huge thing, guys, when it comes to updating the budget, rolling over your 401k. There are a lot of things that people do put off for a considerable amount of time. Day 23, review your rewards credit card. If you're carrying a balance on your rewards credit card, the chances are you're paying far more than the rewards that you are ever looking to get or receiving from that card. Determine if you're really getting your money's worth from that credit card. Now, there's three things really look at in this. Are you using the rewards correctly? Are you just cashing them out? Are you using it to pay down your bills? Does your cash reward match your spending habits? So a lot of them do offer grocery stores. A lot of them offer a lot of different incentives for different locations. Is that where you're actually using it? And does the credit card statement or welcome bonus have a fee? There are a lot of cards out there that still do have annual fees. Be very careful of them, guys. Day number 24, and we're almost done with this list. Reassess the funds that you own. This is huge, guys. Mutual funds can be a low-cost ways. ETF, which I absolutely love. Go through your portfolio, look at what you're invested in, take note of any funds that have high fees or that are not performing. For me personally, on this point, I was looking at my target date funds. I had a 2055 or a 2060 plan. Overall, that fund was incredibly underperforming the market, even in up years, which made me move it out of there. I actually put it into some S&P funds, some large caps, some mid caps, meaning that I have a much higher yield and a much higher return on my 401k portfolio because I did take it out of a fund that was really lagging in performance. Now, day number 25, calculate your savings rates. This is one of the big things, guys. You really have to see where you can save money. If you have a big goal in mind, which I do, paying off my house as you see here, or buying a home, retiring early, you have a solid understanding where your money is, how much is actually going to savings, and how much you need to really hit that goal. Now, looking at day 26, score discounts on things you're already buying. AAA has a lot of discounts, hotels, rental cars, electronics, prescriptions, even looking at using Rakuten, which we do, got a couple $1,000s back a year on stuff that we buy anyways. If you're looking at Sam's Club, if you're looking to purchase larger items, even the smaller items, guys, they can add up anywhere that they're going to give you some cash back. Day number 27, increase the 401k contribution. It is really recommended to set aside 15% of your income for retirement. That is really the big place, guys. If you're not at 15%, if you're at 12, if you're at 8, if you're at 0, put in 1% every single year. That is the goal. You will be shocked by how much money you have in a short amount of time because you're starting to look at the compounding effect of putting 1% in 10 years, you'll be at 10%. Now with this, guys, if you move to another job, so if you do go to another location, keep the same contribution level. If you want to get, and if you want to stay at that 15%, even if you go to another employer, keep it at the 15%. It is imperative, guys. Day number 28, look at dividend stocks. This is one that I absolutely love. There are a lot of ETFs that offer a lot of dividend stocks. It is regular cash out that you can reinvest, or you can use it as that passive income to supplement your income. Be sure to check with a financial planner, which I am not, or other financial professional professionals before you make a major change. Now, day number 29, create a spending plan. This is one of the huge things, guys, that I have talked about before. You have to know where your money is going, the fixed cost, the savings, the investment, even the guilt-free spending, guys. If there is something that you love to do, put the money aside for it. I cannot stress it enough. If you'd like to go to the movies, if you'd like to go out to eat, if you'd like to shop, set it aside, build it in the budget. It is really the best way and the best place to do it. Now, day number 30, this is our final day, guys. You have made it to the end of the video, picking up a personal finance book. Now, this again is one of the absolute biggest game changers that I have ever done in my life. When you look, there are a lot of different financial books. A lot of them have an amazing amount of information in there. Rich Dad Poor Dad is one that I've read recently that really, I went back and I reread it. Millionaire Next Door, Your Money, Your Life. There are a lot of different content in here. 10, 15, 20 pages a night makes the whole book, guys. It really does make a difference when you have the compounding effect. And that's what I've talked about before, is if you're picking up a book and let's say you're reading 20 pages a day, in a couple days, let's say 2 or 3 weeks, you're finished with a book, you do it again, you do it again, you do it again. Well, then you're 5, 7, 10 books in for the year, if not more, depending on the size. It makes a huge difference, guys. The little tiny steps that you do on a day-to-day, whether it's again putting $25 every paycheck into a savings account, it adds up. It makes a difference. It is the compounding effect that we see in actuality in real life. Guys, that'll do it for today's video. Let me know in the comments what you guys think about the 30-day challenge. We are starting this July 1st, which is just a couple days away. So again, let me know what you guys think. And as always, thank you guys for watching.